Why are people getting excited? Is it real? Will it continue? There's a whole lot of bullishness in the air lately. The last few weeks, everybody's thinking the market's going up. Nvidia spurred it. The Nasdaq is up 30% this year. This rally, however, has been based upon 8 or 10 stocks going up that are extremely highly capitalized. And when markets go up on that level of thinness, there's oftentimes a big correction that comes later. The bubble does burst. I'll get to the bottom line right away. I think the market is going higher. I think this is the beginning of a bubble. And bubbles take a while to burst. Okay, we're going to continue with cycle analysis of what we think is really going to happen. We talked about the 20-year cycle repeatedly in past videos. And we see that the 20-year cycle was due for a low in December of 2022. And so far, the 20-year cycle has been bullish. We see the market rallying. And now, June 2nd, it's at the highest price it's been all year. So, there's a very good chance that the bullishness of the 20-year cycle, which is like 1983, 2003, 1963, 1943, every 20 years it seems to make a low and generally goes up for 1 to 2 years off of that low. So that's a very bullish influence. There's also a 30-year cycle in the markets. And the 30-year cycle, the best match to it was approximately 88. It was 29.5 times 3, 88 years ago in 1935. And 1935 turned out to be a very bullish year. 1936 also. At indicating the 20 and 30-year cycles both are up potentially for all the way until the end of 2004. About halfway through this year, I started talking about this Jupiter-Rahu conjunction in the sign of Aries. And I showed pictures of the 1987 stock market and the 1929 stock market when it turns out Jupiter and Rahu were in Aries in 1929 and very close to that position in 1987. So there's another candidate, there's another influence that is there that's different than the 20-year or the 30-year cycles, and that has a very severe decline between August and December of this year. So how do we put the pieces together? The 20-year and 30-year cycles, they are there, they are real, they are pushing the market higher. And if you look closely in the 1987 market, it's not that different than this year either. It made a low June 2nd and started to rally up until the end of the summer, August 25th. You look at the 1929 market, it made a low May 31st, one day off, and went up until September. So the way I'm combining the pieces is the strength of all of these have in common is that there's a rally until September, followed by a fairly nasty decline that could go on into December. Okay? That's adding together the bullishness of the 20 and 30-year cycle and the extreme volatility that's coming based upon the 35 and 94-year patterns. Now, the short-term cycles are also helpful, and they've been giving us very good information as to what's likely to happen. And based upon them, what we can see now is that the market's likely to go up into late June and then have a dip in July and then another rally until late July. July 24th comes out as a high. And then it potentially has a low around August 8th, another higher high August 24th. So basically the market will work its way up and the bubble will continue to grow until around August 25th, which was what happened in 1987. From there into December, I think the volatility and the vulnerability is real, and there's a good chance the market could see a 20 to 25% correction, which, by the way, even if it does happen, is not likely to stick. It looks like the first half of 2024 may continue to be somewhat bearish, although not dramatic. But the second half, because of the election cycle, the 4-year cycle, and the other ones that I just mentioned, the 20 and 30-year influences, even the 1987 market in 88 and 89 was more bullish. All right. In 1929, of course, was the only counterexample, but that is not going to repeat. So, adding all these things together, it may be somewhat complicated. Basically, the bullish cycles are still bullish. They continue to be bullish until the end of 2024. The bearish parts start to become bearish in this summer around July 25th or August 25th would be the beginning of a nasty correction, and that correction should last till the end of the year. Early in 2024, there could be another rally followed by a decline until June of 2024. If you want to know more, check out our video, Bullish Forecast for June, which tells you more about the debt ceiling situation and how ultimately the market's likely to rally in June. And we've been saying that it's probably going to go up at least to the 15th, possibly all the way to the end of the month before we have some potential weakness in July. Notice also in some of the other years, even the bullish years, there was hesitation even on the way up in July and oftentimes in June as well. June 17th shows up as a high numerous years. July 24th comes out as a high numerous years. So we could go sideways after the late part of June or down even in July before reaching another low in August where the market rebounds and goes up higher to the end of the summer. This bullish phase is probably nowhere near done, but there's a very good chance that we'll see some serious gyrations coming starting at the end of August. If you find this content useful, please like, comment, and subscribe.